Hello and welcome to the next episode of Tax Snax. My name is Rebecca Sheldon. I'm a tax barrister at Old Square Tax Chambers, where I specialise in all areas of tax law, including complex advisory work and litigation. If you would like any more details about my practice, please go to Chambers' website at www.taxchambers.com. Now today I will be discussing business rates as part of the new Tax Snax series created by Chambers. And I'll start by firstly briefly explaining what business rates are, secondly by explaining the impact of the business rates holiday, and thirdly discussing the business rates review update. Starting then with what business rates are, the law on business rates is mainly found in the Local Government Finance Act 1988 from section 41 onwards. There is also, however, depending on what you're looking at, other important legislation to consider. So, for example, if you were looking at empty properties, there is the Rating Empty Properties Act 2007, and this restricts relief available for empty properties, and also the Non-Domestic Unoccupied Property England Regulations 2008. Now, in brief, business rates are charged on the owner of the majority of non-domestic properties. This can include, and this is not an exhaustive list, shops, factories, holiday rentals, offices and pubs. The way in which business rates are calculated is firstly to find the rateable value. Now this is an estimate of the building's open market value. We then take this value and we multiply it against either the standard or the small business rate multiplier. Now, you use the small business rate multiplier if the rateable value is less than 51,000. After that point, you then deduct any reliefs you might be entitled to, such as small business rate relief, rural rate relief, hardship relief, retail discount or local newspaper relief. And you would also want to consider whether the transitional relief applies if your rates change by more than a certain amount at revaluation. Certain properties are also exempt from business rates, such as agricultural premises, which include agricultural land and buildings, fish farms, places of religious worship, parks, and property used for the disabled. Now, out of this very small list of the entire list of properties that are exempt, property used for the disabled is going to be one of the more frequent ones that comes up in practice than, for example, fish farms. However, the fish farms exemption is obviously a very important one to be aware of if you are advising in that area. Now, again, this is not an exhaustive list, and if you want to consider this further, you should have a look at Schedule 5 of the Local Government Finance Act 1988, which will give you a more complete list. Finally, there is also an exemption on empty buildings for 3 months, which can be extended in certain circumstances, and this is important to be aware of as well. Moving then to the business rates holiday and having a look at how this impacts business rates. So businesses in the retail, hospitality and leisure industries in England were originally not going to pay business rates for the 2020-21 tax year as a result of the COVID-19 pandemic, and this has not changed. However, the relief has now been extended until the end of June. After that, businesses who are eligible will be discounted to 1/3 of the normal charge for the rest of the financial year, up to a maximum of 2 million for closed businesses. And the Chancellor has said that this will be a 6 billion tax cut for business. So obviously, very positive news for businesses in the pandemic. However, not every business is eligible for this. And eligible businesses include shops, restaurants, cafes, bars, pubs, cinemas, live music venues, assembly or leisure properties, for example, a sports club, a gym or a spa, hospitality properties, for example, a hotel, a guest house or self-catering accommodation. However, there is concern that this does not do enough, in particular for the industries who are not eligible for the relief. So, for example, the aviation industry, which has been very hard hit by the pandemic, as well as the manufacturing industry, which supplies the retail and leisure industry. Finally then, a brief look at the business rates review update. On the 21st of July 2020, as I'm sure you will all know, there was a call for evidence following on from the commitment in the spring 2020 budget to review the business rates system in England, and this closed on the 31st of October 2020. Now, the government had originally intended to set out its final report in spring 2021, which is, as we all know, around now. However, this has now been delayed until the autumn. However, an interim report will be published on the 23rd of March, including a summary of consultation responses. So if you are working in this area or you just are interested, please watch out for that, as it should be useful in terms of establishing where the report might be headed. Now, thank you all for listening. I hope you enjoyed it and that it was helpful. And please do feel free to get in contact either via Chamber's website or in the comments below where this is posted. Thanks again.